If you lose money in 2026, it won't be because the market was unfair. It won't be because your broker was against you. It won't even be because your strategy stopped working. It will be because you broke a rule you promised yourself you'd never break. And the scary part? You probably won't notice when it happens. Because the mistake that ruins most traders doesn't announce itself. It doesn't come with panic or with drama. It comes quietly, logically, and reasonably. And by the time you realize it, the damage is already done. Today, I want to talk about the one mistake that will ruin your trading in 2026. A mistake most traders will make without realizing it, and one the market will punish mercilessly. This is not about indicators, entries, or which strategy is best. This is about who you become under pressure. Every new year starts the same way. Fresh motivation, fresh confidence, and fresh promises. I'll be disciplined this year. I'll follow my rules. I just need a better strategy. That last one is the most dangerous sentence in trading. Because it sounds intelligent. It sounds logical. It sounds like growth. But it's a lie. Most traders don't fail because they lack knowledge. They fail because they can't remain consistent when the market applies pressure. At the start of the year, everyone is a professional. Everyone respects risk. Everyone journals. Everyone is calm. But discipline is easy when nothing is on the line. The real test begins after the first losing streak, the first missed opportunity, the first trade that almost worked. That's when traders stop asking, "Am I following my plan?" and start asking, "How do I make this back quickly?" And that question, that single shift, is where the downfall begins. The mistake that ruins traders in 2026 is not overtrading. It's not revenge trading. It's not bad risk management. Those are symptoms. The real mistake is identity drift. Identity drift is when you slowly abandon the trader you said you were supposed to be. You start the year with clarity. You know your strategy. You know your time frame. You know your rules. But then pressure enters the room. A few losses. A missed breakout. A friend posts profits on social media. The market starts moving without you. And suddenly you bend a rule. Just one rule. You tell yourself, "It's still a good setup. I'm basically following my plan. I'll just adjust this once." That's identity drift. You didn't become reckless overnight. You compromised quietly. And the market loves punishing quiet compromises. Identity drift is sneaky because it pretends to be logic. Here's what it looks like in real life. You're a swing trader, but you start scalping out of boredom. You're a rules-based trader, but you ignore your stop because price will come back. You risk 1% per trade, but today you risk 3% because this one feels different. You wait for confirmation, but you enter early because you don't want to miss it. None of these decisions feel reckless in the moment. They feel reasonable. That's why they're deadly. Because consistency doesn't collapse in one big mistake. It collapses in small exceptions. And once exceptions become normal, your system no longer exists. At that point, you're not trading a strategy. You're trading emotions, with technical language slapped on top. Let's be clear. The market does not reward intelligence. It does not reward effort. It does not reward activity. It rewards repeatable behavior. When identity drift takes over, three things happen. 1. You lose statistical edge. Your strategy only works over a series of trades. Once you change rules midstream, your data becomes meaningless. You don't know if the strategy failed or if you failed to execute it. 2. You lose emotional control. Every trade becomes personal. Every loss feels unfair. Every win feels like validation. You're no longer executing. You're reacting. 3. You lose trust in yourself. This is the most damaging part. Once you stop trusting your own rules, confidence collapses. You hesitate on good trades. You chase bad ones. You overthink everything. At that point, trading becomes exhausting. And most traders quit not because they lost money, but because they lost clarity. The reason this mistake ruins so many traders is because it's invisible while it's happening. No one wakes up and says, "Today, I will abandon discipline." Instead, they say, "Just this once. I deserve a break. I'll fix it after this trade." And when the account starts bleeding, they look everywhere except the mirror. They blame market manipulation, news events, liquidity hunts, brokers, algorithms, anything but their behavior. Here's the hard truth. You didn't blow your account in one trade. You leaked it through inconsistency. The market didn't change. You did. Markets are faster now. Information spreads instantly. Noise is everywhere. That means two things. Number one, opportunities come faster. Two, mistakes get punished quicker. There is less room for emotional error. In 2026, undisciplined traders won't just lose slowly. They'll spiral. Because the more volatile and noisy the market becomes, the more it exposes behavioral weakness. This year will not punish bad strategies. It will punish unstable traders. Avoiding identity drift doesn't require motivation. It requires structure. Here's how serious traders protect themselves. 1. Define your trading identity in one sentence. Example: I am a rules-based swing trader who risks 1% per trade and does not chase price. If a trade violates that sentence, you don't take it. Simple. 2. Make rules non-negotiable. Rules are not guidelines. They are boundaries. If a rule can be broken, it is not a rule. 3. Journal behavior, not just trades. Stop only tracking entries and exits. Track why you entered, whether you followed rules, how you felt. Patterns in behavior matter more than patterns in price. 4. Accept that boredom is part of the job. Most bad trades come from boredom. Professional traders are not excited. They are patient. Let me leave you with this. 2026 will not punish traders who lose. Losses are part of the game. It will punish traders who abandon themselves under pressure. Because the market doesn't care about your intentions. It cares about your actions, repeated over time. Your edge is not your strategy. Your edge is your ability to remain the same trader on your worst day as you are on your best. And if you can master that, you won't just survive 2026. You'll grow. Stay disciplined. Stay consistent. And most importantly, stay who you said you were going to be.